Hello, this is Cryptolyze. I hope you are well on this Wednesday, 18 October 2023. We meet today to talk about GRT, crypto, the graph. As usual, we are going to make this video in two parts. A fundamental part, we will come back to what the graph is, its news, what it is used for exactly, and then we will project ourselves in the short, medium, long term on purchase prices, sale prices in the analysis technique, and it starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. What is GRT? GRT is an API for Web3 developers, clearly. That's the principle. It's not aimed at everyone. It's a functional brick that helps developers interface with their own blockchain or all the other blockchains that revolve around it. It's easy to use and saves time for developers. To be really very simple, imagine it as a general translator that you have with you, portable, which translates any language for you and which structures everything in the same way. That is to say, the idea is always the same way. Someone who will explain things to you differently. In fact, the translator will explain it to you in the way that you expect and in which it is easiest for you to integrate. And that's exactly what the graph is. That's the very principle of it. It is an indexer, and it is a translator of all blockchains to facilitate their integration. So to be really very precise and give you a use case, I am developing an application on, for example, let's say Polygon with its Matic token. So I understand how Polygon works. But aside from that, I need to interface with information that may be on Avalanche, that may be on Arbitrum, that may even simply be on Solana, therefore an architecture which is still different. How do I know where the data is and how is the data structured? I am forced to learn, look at the documentation, learn the structure of each of the blockchains, and systematically interface with each of them separately. So I'm forced to learn and I'm forced to write code for each of them. The graph absolutely removes all of that. I just connect to the graph and directly I say, well, I want the information from this blockchain, this blockchain, this blockchain, and it's structured in the same way, and I always retrieve it in the same way. So it's an ease of use that is really impressive and really important and which is useful as long as we don't have a unified interoperability protocol, something that won't happen for a very, very long time. So, another point that is important is the notion of indexer, and that is really essential to understand the usefulness that it has. The indexer is something that will structure the data and give it to you very quickly, okay? So when you do a search, imagine that you have. For the oldest, we'll recognize the term directory. That is to say the paper directory, the enormous paper directory. You have to look for a name. It is complicated. That is to say that yes, it is. In alphabetical order, but you will perhaps have 40 Jean-Michel when you arrive in the J. And well there, it will be, it's long, it's tedious. And precisely, the indexer facilitates you directly by saying, okay, well you are looking for Jean-Michel, well it is page 3 to page 4, and you look generally it is rather in the middle, there you go. That's actually indexing it. It's a colossal time saving in data structuring and data accessibility. The more powerful an indexer you have, the faster your queries run, and the faster you have an application. It's the same principle because there is the execution of the application when you open it, but also the loading time of the information. If Dove showed you, for example, the total amount of your account on this or that blockchain, it will have to retrieve this information. And to retrieve this information, if he has to go through everything, he's not going to get through it. Whereas if it uses an indexer, the query will be instantaneous and therefore at that moment, the display of the amount will be instantaneous. At GRT level, we see that they have evolved quite a bit in terms of images. That's the old one. The new one is here. And their explanation is also simplified in which we clearly explain the notion of indexing it, that it allows you to spend less, that it allows you not to have clean infrastructure, etc. But above all, afterwards, they explain the notion of subgraphs very well. Subgraphs being precisely personalized mini-graphs for companies. That is really important because it allows you to have access to your data set, to in fact a number of data that you want immediately and as a priority, and that's a big advantage, and that's the strength of the graph too. It's the type of product like that that we don't know as a classic user. On the other hand, as a developer and we start to develop in Web3, we very quickly learn to know them because it is essential. In terms of the token itself, we therefore have 9 billion, a little more than 9 billion tokens in circulation for a total supply of 7 billion. In which we do not have a max supply, which is noted, even if we do not necessarily have a structural emission which is currently given, and we have a deducted market cap which is 800 million, 862 million, therefore which is overall relatively low for a brick very important functional in the ecosystem of all blockchains. So this is an example of a subgraph in which we actually define a subgraph, we make our query, and we retrieve the information structured in the right way. But for me, what we need to understand is that the graph is essential at the moment because we don't have a truly unique interoperability protocol. Until this is the case, we will need entities like the graph, which allow us to structure the data. So we have competitors to the graph, but who are still well below, who are well behind, whether in terms of market share, whether in terms of technology. The graph has the capacity to be able to raise funds easily because they already have a lot of people. We see them behind, who work with them. We will say almost all large applications work with the graph. There is not something that does not work with the graph, or in any case that there is not part of its infrastructure with the graph, because it is the most solid, because that it is the most innovative technology, because it is also, we will not hide it, the least expensive because they are able to reduce costs. So we still have a form of supremacy above. But we must understand that the valuation of the GRT will go from the moment we have an increase in the number of decentralized applications which will use the graph, which is logical because we need GRT to be able to use the graph's products, and therefore we need to have usage to have value. We must keep in mind because we are going to analyze the technical part, and this technical part is only valid if we obviously have a bull run in which we have an injection of liquidity, the use of new decentralized applications, the construction of new decentralized applications in which we will need the graph, etc., etc. So, technically, we have a very nice distribution in progress with a BCARST. So, stopping the upward trend, we are doing the buying climax, classic in a Wyckoff distribution. If you don't understand, the Discord is in description and comment. There is all the information to understand. We have the buying climax, we retrace, we do the automatic rally, then we do a rebound to go retest, we do a secondary test, the rebound is very weak, really very weak, in 1.2 IM. We were told that we were on an ARST here, but the rebound being really weak here, very little volatility with the real breakout. I think that here we are really on the ST, although it is a small ST, but which is classic because we have a dilution of the GRT, which is relatively strong. Take into consideration that the buying climax here is on very few tokens. Therefore, very few tokens, very little crypto GRT, which is available, whereas here we had the dilution, but which is in fact classic on this type of token, in which we have a strong dilution at the beginning, therefore a break in the price accentuated by a bear market. Normally, if we were in a bull run, or in any case in a much simpler market, we will have a form of lateralization like that with a dilution. Okay, very strong, therefore, a number of tokens which increases. A price which remains either identical or which drops slightly, like that, and in which we have a market cap which grows. Okay, the market cap being the price times the number of tokens in circulation when we look at the undiluted, but when we look at the classic market cap. And precisely when we have this system, it implies that we have here an absorption of the dilution. Well, for that, we need capital to absorb the dilution. Clearly, we have not had it in this zone there because we had the bear market. On the other hand, when we start to look a little more at what is happening there since the breakout of FTX, we see that we still have a revival of lateralization. We had Celsius, FTX, the breakout, and we went back above FTX to then go to retest the lower part. What are we going to retest? That's what's interesting is that we're going to retest the break here. So this big candle that we had, followed by this candle, so which is the break in the zone of lateralization of November, December that we had. So this is pretty classic, and what are we going to look for? The confluence zone, which is located at the 886 Fibonacci level, which is rather classic, and which also corresponds to the arrival of our spot zone. So for us, we are really in this approach where we always have a little bit of usage which remains controlled overall. We do not necessarily have GRT usage because we are in a bear market, and therefore quite little use of different protocols and new protocols that are being built. So we are entering a phase of construction of lateralization. So we are in an interesting buying zone if we want to expose ourselves to the GRT, taking into consideration that we can very well go and retest the lowest, go retest the 0.05 without any worries if we ever have a downward acceleration. Don't forget the golden zone targets, which are super important, which are to be kept in mind. So in terms of the perspectives of evolution, this is where it is interesting, is that we can project ourselves as being a consideration of wave 1, wave 2, and return to potentially seek an ATH, yes, but above all a target with a new ATH at 1.618 for a wave 3, end of bull run of course, in which we would go a GRT in the 4 at $5, so a big target that we have in head for some time. On the other hand, for that obviously we do not have the same number of tokens, so that implies that we must have much more incentives. We must have a bull run which is stronger than the precedent, and above all a really important use of decentralized applications to give value to the GRT. So that will take time. Classically, we can have a first target for me which is essential, which will really be the break of this lateralization that we see. So here, which is characterized by 1-to-1, $5, 1 and 1.2 exactly, okay? $1 and $1.2, which really seems to me to be the right target in which we will have a lot of people who will come out. There we will really have a form of sell-off because many people will be overexposed to the GRT with prices which are higher than $1, and therefore we will have a reduction in the rings here where people who will leave ABE further behind, like habit of people who will do a first practical work. So we will have a retracement, but which is at the same time classic of Elliotist waves. Wave 1, wave 2, we retrace, we make the big impulsive wave 3, and therefore behind us we will have the break of 1 with a bullish acceleration to make this big wave 3 Elliotist well, and we are in a simple and classic diagram of a bull run. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and I'm sure that you will appreciate the analysis that I carried out on the FET token, which is the Fetch AI token therefore, which is a mix between technology, artificial intelligence, and blockchain. I'll give you my opinion. I'll put the video there and we'll see you tomorrow at 7 p.m. for the daily.